Good day, everyone. Happy Friday. This is Markets for Millennials. This is our weekly market wrap from the week of August 2nd to August 6th. And we're starting out here looking at the gold chart. And I just will, again, I feel like I do this all the time, apologize for how crazy my gold chart is. I've done so many different analyses on this gold chart. I think that gold and Bitcoin have been the story, definitely in the last day, but gold today, Bitcoin for the last couple of weeks. But I just want to take a minute and zoom out because I want you to understand that when you do your TA, it's really important to look for market symmetry. And sometimes that means that over time you're going to have to make some adjustments to your trend lines. You can't be married to any particular trend because if price tells you that something else is happening, then you have to pay attention to that. And so it's important to also see, like, I'm just going to use this gold chart as an example. If you look at this, like, I mean, my darkest trend lines are showing this descending channel, right? So these are parallel lines, but these were not my original parallel lines. In fact, I think, if I recall, my original trend line was right here. I'll just darken that up for you. And the reason that was my original trend line is because it actually worked out a lot. Like if you cloned it, it worked a lot of the way down. In fact, I think actually, if I remember, it was this line right here. You can actually see it was providing support on the way down. And as I cloned it, it turned out that it worked out on a lot of different places of this chart. So as we were coming down this sort of descending channel, it was a lot steeper than where I have it now, right? So your eyes are immediately, because of my trend lines, the way that they're drawn, your eyes are immediately drawn to this descending channel right in here. But it's important also to recognize that there are smaller trends that take place within the overall trend, and so that's really important. So, as you don't want I mean, this is really messy. I try to fade as much stuff into the background as possible, but you don't want your trend lines to be too messy. You don't want to put too much because it can just be overwhelming, and then you can really miss the what's going on with price because you got too many things going on. But just to give you an example of smaller trends that can take place, let me zoom in a little on gold. Let me show you a trend that took place right here on gold. All right, so if you come down here and you were to darken this up, you can see that there's this kind of descending trend line that could go there, right? So at multiple points it provides resistance, right? It's not exact because I'm not taking, like, I'm doing this really fast. And some people might have even, looked at this as, let me erase this really quick. Some people may have even looked at this as a descending wedge and been looking for it to break out, And so, yeah, this right here, this is a wedge, but it actually broke down because they don't always break the way that you want it to. Another example I want to show you is if you make a trend line right here, the second time that we kind of had a little bounce, or that the second time we hit about 1675 in that range, you can actually make a trend line to the upside, right? And so if you were to clone this, then you would see here that it provided, somewhat of a channel. It's not exact, but somewhat of a channel, and that's pretty clear, right? So this is a counter trend move because the trend is down, but price came up, and so over time, I remember, as we were coming up, I believe we got right here, right when we successfully tested this horizontal resistance at 1773. I said, okay, there's no way we're going back down. In my opinion, there was no way we were going back down for a third bounce down onto the 1675 support, because we had made a higher high and then a higher high and a higher low and seemed to have established this line as support at the time. And so, but so now it just seems like it was just a counter trend rally. And what I ended up doing was revising to get these two peaks, and then it turns out that there is some symmetry in a, like right here where you see this kind of second line and then this bottom part of the channel, there is some symmetry as well. You can see how it was resistance up here, wicking, wick touches, and then down here as well. So then the question is, what's happening with gold? It's made a lower low, a second time failed to make, it's making a lower high than right here, and it failed to try to make a higher high from mid-July, and we've come way down ever since, right? You can even see here, this was a line that I was looking at for a little bit, coming from the March 30th low, and we had a touch June 29th, and we've now broken down below that. So I'm just going to get rid of that. I need to start cleaning up my gold chart a little bit. But the reason I say that is because while you have this channel right here, which is a downtrend channel, what I also want you to see the market is paying attention to, or at least so it seems, is this trend line right here that's coming up. Right? It's an ascending trend line. And if you pull back, you can see that on my chart it's kind of faded out. Let me show you one of the places where I found this. I think this was originally where I found this trend line. Right? You can definitely see the symmetry, and there are a whole bunch of cloned lines. Let me just pick another few of these trend lines out as an example, just to kind of show you where I'm coming from here. Right? So you could see that in all of these examples, like all across, you've got how many different places where these lines were relevant. The market was respecting them. And then if you even look as we get closer to into 2020, the market was playing with it as resistance, got above it as support, and then we had that huge run up between June and the beginning of August. And then as we came down, we had a bounce. It did sell down. We had a bounce, but then it found support at 1776, came back up, and then bounced off of that trend line again, broke through, bounced back up, broke through, right? And then it had a bounce on that trend line here on June 4th, right? And so even now, like the point is like if you look, let's just look at this for a second, which trend is longer? I mean, it's pretty clear that the uptrend is longer, right? So ultimately, those trend lines are going to carry they're going to carry more weight because the length of time with which these trend lines and this symmetry have been playing out. So that's really important to know. So ultimately, I would say maybe the first place that I would be looking at for, like, if gold was going to be on a long-term, going long-term bearish, we would have to get below here. We have to get definitely below 1675. We'd probably have to break this trend line right here in order for me to be convinced that gold was going down for the long term. But it's not. I think the macro backdrop, even though obviously yields are rising right now and gold has been taking a hit, I'm not sure what's happening, but I do believe that the macro backdrop will ultimately go in favor of gold. But we'll definitely see things are not looking good, especially after we came down after the rise into the beginning of June. So that's going to be something that we need to pay attention to. And the same thing on silver. Silver is also coming down. Silver, in fact, looks worse than gold. One of the things that's interesting to look at is the gold to silver ratio. And I actually am going to need to adjust and erase some of these trend lines. I kind of drawn around because I was showing somebody this one time, but just curious, if you kind of just make a trend line right there, it's kind of surprising because normally in a precious metals bull market, you're going to see silver outperform gold. And so somebody would have been, just like it did right here, after you pop below, you would have been expecting a retest and a resumption. But if you notice, we never got the resumption down, never made a lower low here. And so that's interesting. And we came, in fact, not only making higher lows, right, but we are now like breaking through again. So it'll be interesting to see over the next week, do we have a couple of days where this ratio is in favor of gold? And there could be all sorts of reasons for that. It's really hard to tell because lots of times gold can be bid more than silver because of, maybe there's turmoil in the world, or, maybe there's a crisis or something like that. But usually gold holds up better. But right now, at least, it doesn't look like that's happening. So it's really interesting. All we do know is that yields are coming up again, right? And so I have this channel, and I've adjusted this channel a little bit here. I'm going to darken this so it's a little bit less visible. This is my original channel, and then I eventually added this trend line below. And it looks like the market is respecting it, or it was respecting it. We bounced down and hit it as resistance, came back down, and now the last 3 days we've seen a rise, and it looks like it's probably going to close above that trend line. So look here, you can see again that market symmetry at play here with these with this red candle here, red candle here, red candle here. So the market is respecting this symmetry right here. So the question is, are our yields, our bond yields on the 10-year going to come up and eventually shoot back out to new all-time highs, or will we continue to be sideways in this range, or is this just, is this kind of like a little blip? And I mean, because we have a pretty pronounced downtrend, I think, in yields. So if we go like this, see, like this would have been the way that I would be looking at it, but it looks like we are breaking that again. And I've said this in previous videos. You have to look at things in terms of, short-term momentum, medium-term momentum, and long-term momentum, and the angles of these trend lines. So obviously this descending trend line is the most shallow, and so that's going to be the one that has the most weight in the long term. And then you have this momentum trend line, and then you have this momentum trend line, which has just been broken. So we'll be looking to see if basically this momentum trend line, this middle one, will get broken, and then if we can get to the upper trend line there. But then yields are coming up, so obviously that explains gold and silver coming down. Let's take a look at the dollar. The dollar is in this kind of ascending channel, and you can kind of see again the market symmetry playing out here. And so we kind of have had this long-term downtrend, and the question is the dollar turning up? And I think that ultimately, I mean, if you just look at our chart here, going back into, like, we're at the same level that we first touched to the downside back in August of 2020. So we're almost exactly a year past, or we're a little over a year past that. We're the exact same level, which is really interesting, right? So we've been sideways, and everybody's just kind of waiting to see what's going to happen on the dollar. And for me, in order for me to feel like the dollar is going to be long-term bullish, we have to get above this resistance level, which is around 94.60. And until we do that, I mean, I could totally see us continuing to ride this channel up until we hit that level, and then then we'll see if we end up coming back down or not. So it's interesting because you could even look at this in terms of, if you want to look at it horizontally, right? How many places, like, I mean, it's pretty symmetrical. You could see the market symmetry all over the place, right? So maybe this is going to be a long sideways consolidation. Who really knows? But that's kind of what I'm looking for on the dollar. That's kind of where I see it right now. And again, there's two things that I want to just point out again here. One of them is that the DXY is the dollar against a basket of currencies, right? So it's not actual purchasing power of the dollar. It's just strength relative to this basket of other currencies. And those currencies, like 50% of that is the euro. And I think like 20% of it is the Japanese yen, and then the rest of it is split between the British pound, the Canadian dollar, the Swedish krona, and the Swiss franc. And And so it's a basket, and it doesn't even include its weight against the Australian dollar or the New Zealand dollar or many other currencies. And so that's one thing to realize. The other thing is, again, I've said this a number of weeks back, a lot of people think that yields and the dollar are tied together, but that's obviously not true. Look at the price action, generally basically up, and then we've been generally basically down ever since the beginning or the middle of March. But it hasn't been that way. In fact, we've, instead of coming basically down and then basically up, as sort of like a inversion of that, we've seen it just chop down, up in more of a W. And so if you were going to see that sort of action on the yields, it should actually look more like this, but it's not. So that's something else to keep in mind, right? So there's a lot of things at play that are happening, and the question that a lot of people have on their mind as far as yields go is the Fed going to raise rates, their base rates, and what effect is that going to have on the dollar? A number, I think, let's see, Australian Central Bank and the England Central Bank, they have both, and I think the Canadian Central Bank, they have both either tightened a little bit or tapered a little bit, or at least they've announced that they're planning on doing it. So the question that a lot of people have on their minds is the U.S. going to follow suit, either at Powell's, with Powell giving a speech, a press conference and a speech at Jackson Hole coming up, or at maybe one of the upcoming Fed meetings over the next few months. But one thing that I would just keep in mind is that, up until this point, there's been basically no talk of raising rates and or tapering or tightening, at least in the Federal Reserve. Even though they all jawbone about all kinds of different things. But the one thing to keep in mind is that the when you look at like the last couple of Federal Reserve meetings, a lot of them have talked about, when the topic has been brought up, they're saying it's not going to happen until 2023, which coincidentally is also the same time that FedWire is going to be, initiated, and so that's also something to think about. How are they going to implement that? Oh, and why are they going to raise rates then? And so if the market is looking ahead to that, it is looking way ahead to that. So that's something to consider. Let's take a look at the indices. You could just see, I haven't updated my my S&P chart for a little while, so I got to work on that. I removed a couple of my ascending trend lines because I was having some trouble figuring out where the right trend line should be at this point. But as you can kind of see, if I just eyeball it right here, let's see what's going on here. You kind of see that we've got this sort of upward sloping trend line that's held. Is this the trend? Maybe. Is this an ascending wedge because it's kind of tightening up here? It's really bad. I'm sorry. That's more like it. You can actually see that the volatility, at least, even to the downside, right? Everything is tightening. It's coiling. So the question is, why? Is it about to break down? Is this an ascending wedge and it's going to break down into a correction, a 9, 10, or 15% correction or something like that? Or is there something else at work? And I think I've heard and seen some other people's charts more recently who have said that there's a channel going up this way, but then there's also a channel kind of going this way. And so, it looks like right now it's respecting the kind of more shallow trend line to the upside here, but then the more steep trend line on the bottom side. So again, that idea of it being potentially an ascending wedge, there might be something to that. But the S&P, if you think about it, all like for the last 2 weeks, it's been basically sideways, small gains, retrace, small gains, retrace, small gains, retrace, gains. Today, we finally kind of broken up higher than this last 2 weeks range. And so the question here is, what's the S&P going to do from here? Are we going to continue into price discovery? Are we going to come back and retest this support again? So we'll be looking for that over the next week or two. The NASDAQ, the NASDAQ, it's a little bit more clear. You can actually see what I've got here is I've got this channel, which again, if we just take the outer bands of this channel and we just kind of clone a trend line here, you can see the market symmetry respecting it along here. And then if I lower this, you could see the market respecting, where was it? Yeah, you can kind of see the market respecting it kind of along the way here. You can kind of see it a little bit lower. So that's kind of I think where the market is respecting the most. But definitely ever since the middle of May, on the bottom, it's actually been ascending, and so this to me is a little bit more clear wedge pattern, and maybe an ascending channel here. You can kind of see it's a little bit of symmetry there, but to me this is more of a wedge. So I think I could be completely wrong, because just because it's an ascending wedge doesn't mean it's guaranteed to break down. But I actually think that we are going to eventually break down from this. It'll be interesting to see over the next week or two if this comes to fruition. But I do actually think we're going to break down out of this wedge and come back down to about 14,000, which I don't even know what kind of correction that would be. If we just go from today's close, that would be a 6.9% like drawdown. So not even close to an actual correction. But I think that is kind of where we've got some support established, or possibly, if we think about this, possibly even to here. That would be a little bit closer to correction territory. But that's kind of where I'm thinking it's going to go. And if nothing else, to continue to prove this channel, it's going to have to come down. So I'm betting that somewhere over here, and that's kind of why I think it's going to stop at this resistance or the support line, because I think that confluence of support will be enough to continue to push the NASDAQ up. And then of course it could break down. I'm not saying it will, but that's just kind of what I think is coming. The Dow kind of got a lot of stuff going on here. The Dow is just breaking above this kind of overhead resistance. It's going to close on the week there. So what I'm going to be looking for into next week is price going to retest this successfully and then resume off. That's what I'm looking for over the next week. And then finally the Russell. The Russell, I've talked about this a lot. I feel like I keep repeating myself. The Russell is continuing to just be sideways, and maybe this spot right here isn't. I think maybe just to show you guys, I'm just going to darken up these other support lines. Maybe I'll make this one a little bit, less dark, so you can kind of see that we have some pretty good support established here, and here, and here. And what we've been toying with is actually, like, this is the one chart that I have not adjusted my my trend line that touches down from the March low of 2020. That has still been in play. And it's been toying with that level. Obviously, we've got some poke throughs at times. You can see it on smaller time frames. That's kind of, I think, what it's toying with right now. So the question is where's the Russell going to go? The fact that the Russell has not made a new all-time high, I've been talking about this a lot, since March 15th, to me is slightly concerning. To me, it does give weight to the possibility of going back to more of a deflationary environment over the near term, over the next few months. But I think that any sort of deflationary situation is going to be immediately responded to by the Fed, and they'll ease more, they'll purchase more, and then that's just going to kick the Russell back up eventually. Because I've talked about this before, think about after the crash, and you think about how the Russell underperformed basically up until the election, and then you had the NASDAQ, which was hugely outperforming. And And again, like when I say deflationary or inflationary, obviously the asset prices were inflationary, but the environment was really only conducive to tech. And I think that it's possible that we could be going into more of the same again, at least for a short time. Or maybe that's what has been happening for a little while, and that we're just, having to consolidate until this, breaks out and then goes to new all-time highs. But that's kind of where things are at. Really quickly, take a look at Bitcoin. I had a video yesterday where we talked about this. Again, talking about market symmetry. I talked previously about, in my last video yesterday, about Bitcoin's most important trend line. Cloned it. You can see that it was retested as support right here on the cloned trend line. We broke through today. Here we are currently about almost 5% up. It was as high as, let's see, how high was that? I think it was about almost 5.5% up at one point today. And we're of course going into the weekend. And so volatility is going to change a little bit because of the volume. Potentially we could see a huge run up, or we could see, and briefly, I mentioned in my video previously, we could see it come all the way up to, some resistance, and then come back down to either test the horizontal level or to test the most important trend line. Totally possible. And then just for perspective, let me show you some moving averages on here. I just think it would be helpful. You can kind of see here, 50-day here, we're well above that. We broke above the 100-day over the last few days. And the next target, if you're looking at moving averages, this is the 200-day moving average, which happens to coincide with a small resistance level that I had set here at 45,240. It's very close to it. So we'll see if over the next few days Bitcoin can break that. Honestly, I don't really care too much about the moving averages because they're lagging indicators. But now that we've broken the most important trend line, I think it's only a matter of time before we kick it up to, over the next month, getting up close back to our old all-time high. So that's what's going on in the markets. Again, I'm not going to look at the sectors individually today. Maybe I'll do a video next week where I look just at the sectors. But that's all. Go ahead and like and subscribe and share if you found this helpful, and I'll see you guys next time.